Welcome to The Mind of Money. My name is Douglass Lodmell, and we're continuing our conversation with economist and investment advisor Benjamin Lodmell. Welcome back again.
Thank you.
So today, Ben, what I'd like to talk about is the functional process. And we've spent a lot of time in this series talking about why someone would want to consider a Swiss private bank and why they would want to consider investing in Brazil and in China in individual shares and diversify out of the dollar as the store of value over these next 5 and 10 years. So what happens functionally? I know this is a big issue for a lot of my clients because they're so used to walking down to Bank of America and opening an account or going online to E-Trade, frankly. How do you open a Swiss private banking account at, let's say, Pictet?
Closely held Swiss private banks are different in the sense that the bank does a lot more due diligence,
Right.
and they're a lot more careful about who they take as clients. Where if you go to a retail Bank of America or whatever, you show up an identification and a social security number and you
open an account.
Right. So it's almost as if these institutions are as concerned about who banks with them
Right.
as the investor is about who they're banking with.
Right.
And rightly so, because they have tremendous brands that have been built over generations. They don't want to waste it by taking a client that could endanger that.
Sure.
So it takes longer, but functionally it's a fairly simple process. I mean, we literally email pre-filled out account opening documentation, clients sign it. We have to have copies of their passports, a brief, simple explanation of the source of your savings.
Right.
It's really no big deal. Most of our clients, certainly all of them that are working with the law firm, open their account in the name of a trust structure. In the name
Right.
of their International Asset Protection Trust, it's no different of a process to open the account. We really like to see clients open accounts in legal entities that is not their name.
Right, right. Well, I mean, of course, there's lots of reasons to do that. I mean, one very important thing for a U.S. client to understand is that when it comes to asset protection, opening an account in Switzerland in the name, in your own personal name, provides no asset protection. A Swiss bank, just the banking system itself is not asset protection when it comes to a lawsuit. So if you have a Swiss private banking account at Pictet and you get sued and the U.S. court asks for the money back, they're going to get it back. Pictet is, if the names match, then Pictet is not going to resist at all because it's not about that for a Swiss private bank.
Fortunately, I mean, Pictet's very familiar with international asset protection trusts.
Right.
They even like to see U.S. clients utilize them.
Sure.
And even when clients resign as the trustee because they're in such of a serious lawsuit or some source of a creditor threat, say for example they're using a trust company such as Southpac, which a lot of our clients are working with, use them. Pictet is very familiar with. There's lots of assets under management from that are structured with trusts and with Southpac as a professional trustee. So it's a smooth process. A lot of our clients wonder, how do we get money into the account? How do we get money out of the account? It's really no big deal. You don't want to send $1 million over and then wire $1 million out.
Right.
That kind of triggers the money laundering alerts. But
Right.
it's as if you were changing from Merrill Lynch to Smith Barney. It's no big deal. If clients want to wire funds out, they wire it back into the bank account that it came from.
Right.
So
Right.
it's yes, physically the institution's in Switzerland, but it might as well be anywhere. It's bank to bank.
Right. It's just an interbank transfer. It's a wire in effect. You can even transfer shares that you already have if you have existing portfolio that you're not going to sell. You can hold basically more investments than you would be able to hold here, which we've already pointed out. You
Sure.
can buy on the exchanges of the countries that are not available here. You can hold multi-currency accounts, so you can have francs and dollars and pounds and euros. So yeah, the Swiss banking system, once I can tell you from experience, we've now had dozens and dozens of clients that have needed and chosen to open a Swiss banking account, either for asset protection purposes or simply because they're choosing to diversify. The common feature that they all say is, wow, I wouldn't want to bring it back. I mean, they get very comfortable.
Sure.
We're kind of used to, in this country, feeling a little bit vulnerable from the legal system about our money. Having your money there in an asset protection trust, I can tell you from lots of experience, makes you feel very safe. And that is, frankly, I mean, one of the big reasons that we started doing this is because of asset protection.
Absolutely. It was almost like you backed into the awareness that it's also the best platform.
Yes.
And the best institution in the sense that there's no credit risk. Clients see their portfolio online through Pictet Online, and it's, as an independent, we really manage a lot of the interface just so that clients are always making sure that they're just comfortable with every decision that's made, with what their options are. We're never in a hurry. It's a thorough, methodical process that I consider just a long-term discussion, because it's a dynamic environment, and the main thing that we're focusing on is that we want to put assets in a good, safe institution that gives us access to the assets we want to purchase, and that we're constantly focusing on the long run, with the objective to appreciate your wealth, not only to beat inflation, but to really grow your wealth.
Right. Sure.
Most clients make money in their businesses, and they often forget that your money should be making money.
I know that from experience. It's very easy to forget that your money can make money. It can be working for you. And that's truly, when you enter the realm of wealth, that's how wealthy people think. They think that their money is their wealth in the sense that it's making money, not that it's just what allows them to buy assets and live a lifestyle. So.
Well, and we've seen also a lot of small business owners, for example, that are great savers. They've built
but their money's not really working for them.
Yeah, and the tendency is often to think of putting their capital back into their business because it's the only world that they can imagine getting a return on investment.
Right. Yep.
And when you're talking about the kind of investment returns that we're talking about,
you should consider your own business is not the only option.
Absolutely, and it's a lifestyle issue too.
Yeah, exactly. So, well, thank you again. This was important, I think, just functionally to help listeners understand how it works. And again, you can find out more at crinvestmentadvisors.com. And thanks again. We'll talk to you soon.
Thank you.
Thank you. This has been The Mind of Money with Douglass Lodmell, interviewing economist and investment advisor Benjamin Lodmell. We will see you next time.